A lot of people ask me, what kind of trading do I do? And the funny thing is, when I explain it, most traders say the same thing. Wait, that's it? Because the strategy I use today actually is very simple. And most traders never think about the trading this way. The idea is based on something most traders try to avoid: fear. When the market gets nervous, something very interesting happens in the options market. And that's where the opportunities start appearing. But it took me a long time to figure that out. Because when you first start trading, there are thousands of strategies. You got day trading, momentum trading, swing trading, long-term investing. And I've tried most of them. But over time, I've realized something very important. The strategies that look exciting are usually the hardest ones to manage consistently. So eventually, I simplified everything. Today, my trading revolves around just two markets. Yes, two markets. And those two markets are individual stocks and the NQ from the Nasdaq futures. Both of these markets allow me to structure trades in a very specific way. And the key isn't trying to predict the market. The key is how to trade structure before you even enter it. Instead of tracing the market, I usually wait. Wait for those pullbacks. I wait for fear, and I wait for moments when the market starts paying much more premium. Because when the market gets nervous, option premiums expand. And when the premiums expand, the market is suddenly paying a lot more money. And that's when the opportunities start appearing. For example, when I trade NQ future options, I usually wait for the large drop before I even consider entering. The one rule I follow very closely is that I like to see a 300-point drop in the NQ before I even begin to think about placing a trade. Moves like that usually mean fear is rising, the VIX is moving, and option premiums expand very quickly. That means the market is suddenly paying much richer premiums. I never chase the market. I wait for the pullback and let that trade come to me. Now, sometimes I place what we call a crazy Ivan order, which is an overnight resting order I place as if the NQ dropped an additional 300 points. If panic hits overnight, that order can suddenly fill at a very rich premium. Now, it doesn't happen that often, but when it does, it's a great entry. The most important part of trading is risk management. The number one thing I watch is my buying power, because the types of trades I place, especially those NQs, the buying power can change very quickly. So I keep my buying power usually around 28% so that I always have dry powder available, because something always happens in the markets. At some point, fear will show up, and when the markets start paying higher premiums, which is basically insurance, that's when dry powder comes powerful. The markets will eventually sell off. It's not a matter of if, it's just when is it going to happen. Now, another tool I use in my trading process is AI. My assistant Vera, who helps analyze potential stock picks. I've developed preset guidelines and parameters, and Vera runs stocks through them while pulling charts, key information such as PE ratios, analyst ratings, comments, dark pool activity, current news affecting that stock, and earnings patterns, just to name a few. She can also suggest trades for you if you ask her. She also reviews my portfolio. She will anticipate potential issues and risk, and she keeps side reports that I use for managing my positions. For now, Vera does not place trades. I still make this final decision. My main stock strategy is selling out of the money puts around 34 days to expiration and about 16 delta. The puts are well below the stock price. And when you sell a put, basically you're offering to buy that stock at a lower price and collecting that premium up front. Most of the time, the stock never even gets there. The idea is simple. Collect the premium. I never hold that trade to expiration. And most of the time, I am taking profits at around 50% of the premium. I focus on strong companies with heavy liquidity, active option markets, and names I am comfortable holding in case I am assigned. Futures NQ, the second market I trade, is Nasdaq futures options, mainly the NQs, usually 16 to 18 delta short puts, around 34 days to expiration. And I use this structure because of the strong premium, higher probability, and the quick decay. Most of the time, I'm in the trade only 7 to 10 days and take profits of at least 50% of that premium. Another advantage of that is these trades are very easy to roll if needed. Now, you're probably wondering why it works. So instead of trying to predict the market, I structure trades where the price is far away. Premium is high when I enter, and the time is working in my favor. Over time, that creates consistent opportunities. Now, we also have a live show, Rob and Maria Trading on YouTube channel at 3:25 daily and on Sunday at 5:55. Rob will trade his SPX 0 DTE strategies live, and we will walk through the trades and the process in real time. So if you want to see how this actually works, come join us on the live show. And if you're interested in AI 0 DTE tradings and option strategies, make sure you follow the channel. And thanks for being here.
That was perfect. 100%.